What's going on, guys? So in this video, I'm gonna be showing you guys how business credit isn't just only about the great credit score, but it's also about building up that foundation so you guys can be able to have long-term funding. This is gonna be our fourth video in our series of business credit, and today I'm really gonna share with you guys the ultimate guide on how to be able to properly structure your business, and also introduce you guys to a game-changing strategy called the funding trio, where you guys can be able to literally have your business set up properly and get as much funding as you guys need. So without further ado, let's get into this video. So what's popping, guys? It's your boy All Boo, and we're back here with our series of business credit. So in the last couple of videos that we actually went through, right, we actually talked about how to be able to get an EIN number. We talked about the different business credit bureaus, and also, so we talked a little bit about business credit, right? Along with talking about some of the major key players as far as business credit. We talked about all the major players as far as business credit. So here we're going to talk about properly structuring, right? So being able to build business credit, it's much more than the score. What you need to do in order to be able to get your business properly funded is to be able to lay out that foundation. So a couple of things you guys are going to need before you even try to walk into the bank and apply for $100,000 of funding is that you're going to need to lay out that groundwork in order to be able to get funded. So first things first, you're going to need to have an LLC. Yeah, you can have a sole proprietorship, but honestly, if you're going to go that far, I would honestly just go ahead and get an LLC. That way you guys can be able to have that protection as far as it being a different entity. So with the sole proprietorship, right, if you guys end up getting sued, they can be able to come after your personal assets. Sole proprietorship, they can come after your personal assets. So you want to make sure you guys have an LLC. That's what I recommend. And I'll honestly do it as a multi-member, but that's not too big of a deal. So make sure you guys get your LLC, get your dots in a row. And then after that, what you guys can do is literally go ahead and get your EIN number. So in the previous video in this series, we talked about the importance of the EIN number and also how to be able to get it. So you guys should know by now, just shoot over to the IRS website and you'll be able to get it before the day ends. Then the third thing you guys want to do is to go ahead and get a business bank account. Having a business bank account is super important, and you guys want to make sure you keep money in a business bank account because they're going to look at that whenever you guys do go for funding. So it's very, very important to be able to have. So you guys definitely want to go ahead and get a business bank account because trust me, whenever they're going ahead and applying for funding, they're going to look at the actual money that you have in your business bank account. So like I previously mentioned, your bank rating is going to matter a lot, especially if you guys get funded. So you want to have at least $10,000 or more, and also start to have a lot of transactions. So if you guys can be able to go ahead and get a merchant account and go get a Stripe, and then start to do business, transact different invoices, and then be able to get that deposit into your business bank account, that's going to look really good, especially when you guys are applying for funding. Like for example, if I have a client, right, if they're trying to go to Chase, I'll always go tell them to open up that account, put at least $1,000 in Chase, and then go apply for funding, because that way you show the bank that you have more skin in the game, and they're going to be a lot more lenient whenever you guys get those $20, $30, or even $50,000 credit approvals. So make sure you guys play your cards right, especially with the banks. It's chess. All right, so here's the fun part. Now that we actually laid out the foundation and the framework, this is the fun part. So what we're going to do is actually go ahead and start to establish trade lines on your business. A couple of things that you guys want to do, right, is that you have DMB, you have Equifax business, you have Experian business. One actual trade line that I really like a lot is actually Credit Strong. So Credit Strong, they actually do have secured loans that you guys can be able to go ahead and pay monthly. All right, so one trade line that I really do like is going to be Credit Strong. So Credit Strong, they have secured loans all the way from $5,000 all the way to $50,000. And these actually report to your business credit bureaus. They actually report to Equifax business, Experian business, and Small Business Financial Exchange. So these are all the business credit bureaus that banks will look at. So you want to be able to at least have some trade lines on there, and it's going to really help you guys out with being able to get higher limits of funding whenever you do go apply. And so, like I previously mentioned too in earlier this series, you guys can be able to go ahead and get Dun & Bradstreet with Uline, Granger, Quill, but that's not what really the banks are going to look at. So if you want to be able to optimize it for bank lending, then I would honestly just focus on building out your Experian, your Equifax, and also your Small Business Financial Exchange. Another way that you guys can be able to go ahead and get trade lines that report on the business side is by being able to get a secured business credit card. You guys can be able to get this at any one of the major banks. As long as you guys have good personal credit score, that's not necessarily going to be one of my higher priority things. So I would just definitely make sure you guys have that in mind if you guys do want to build out a stronger business credit report in the long run. Now, so step number three, right, is to go ahead and make sure to establish great payment history. So business credit is a lot different than personal credit, right? With personal credit, all you have to do is make sure you at least pay off your minimum payment. But with business credit, you don't necessarily want to pay it off on time. You want to pay it off as early as possible, because in the previous video that I mentioned on how actually the payment schedule is worth, the earlier you pay it off, the higher your business credit score is going to be. So if you guys pay it off 7 days, a little bit earlier than the actual due date, that's ultimately going to help you guys getting that higher business credit score. And I really want you guys to kind of start playing chess with business credit and just credit in general, right? The more amount of fun you guys are going to be able to get in the long run. So always kind of have that long-term strategy and that long-term mindset in order to be able to get approved for higher limits in the long run. So if you guys want to make sure you guys have the highest business credit score possible, always make sure to pay it off not on time, but a little bit early as well. All right, cool. So while step number four, right, is to be able to understand the role that small business financial exchange actually plays, right? So especially if you guys want to be able to get the SBA loan, you guys have to understand the role that small business financial exchange plays. So it doesn't necessarily report as far as a business credit bureau, right? Or you can go ahead and pull your actual report. The thing is that happens with small business financial exchange is that it's a hidden player. It's what lenders will actually use. It's more of like a data repository that they actually pull from. So they'll go ahead and source from all the different lenders on your payment history, on if you have any liens. So it collects all this different data to make sure to see if your business is going to be compliant and also the chances of your business actually defaulting. So you always want to make sure to keep your business credit report clean, because you might think that, oh, if I charged off an American Express business credit card and I try to apply with Chase, that I'll be able to get approved. But the thing is, people don't understand is that they actually do report to Small Business Financial Exchange if they see that you already defaulted on one business credit card, or if you have a UCC1 lien, then that's going to show up on your actual business credit report, and it's going to hinder your chances significantly on you being able to get any type of business credit. So that's the main thing, right, is whenever you guys are trying to go ahead and get business credit or just credit in general, is to always make sure that you guys go ahead and clear up your debt. So I've actually had clients, right, whenever they have gotten the items removed off their credit report, if they go ahead and try to apply for funding with the same actual bank that they actually had a charged off account with, they're automatically going to get denied. Just because it's off of your credit report, it doesn't necessarily mean that you don't necessarily still owe them or that you're also not in their system. They're going to be able to find out, and if they do, then you're not going to be able to get approved for any more. On how to be able to understand how these actual data companies work, and especially with Small Business Financial Exchange, that's going to be a major player, especially with business credit. So just definitely keep that in mind. All right, guys, so this step number five, right, is to understand the funding trio. So it's actually one of the ultimate strategies on how you guys can be able to get approved for the highest limits of funding. Now, you might be asking yourself, Abu, like, so what's the funding trio? It sounds pretty cool, but I don't really necessarily know what it means. So the funding trio is all the three things that lenders really look at in order to be able for you to get approved for business credit. So the first pillar of the funding trio is going to be looking at the owner's credit. So it doesn't matter if you guys have had a 10-year business, a 20-year business, whatever you guys still apply for, even though they might not necessarily personally guarantee it, they're going to still want to see the owner's credit for the most part, because of the fact that they want to be able to know if anything does go wrong, if the owner is actually credible. They look at the owner's credit in order to be able to find out if this person is credible, and we can actually be able to go ahead and actually lend to them in the long run. So they're going to look at the owner's credit as a very important factor as far as you getting approved for credit. So this is going to be able to strengthen you as long as you guys have a strong personal credit report and you guys don't necessarily have any high debt, you're going to be good. Now, the second pillar of the funding trio is going to be the business age. So the longer you guys have been in business, the better off your business credit score is going to be, and also your funding ability. So you'll see that a lot of different lenders, right, they don't necessarily start to open up lines of credit, loans, until your business starts to get 2 years or older. So the older your business is, right, the better off the banks feel about lending to you, because you've been through different seasons of business and they understand that you know how to be able to manage your business, especially if you guys have been in business this long. I'm sure you guys have had the statistics where 98% of businesses fail within the first 5 years. I mean, I feel like all of it's made up, but I feel like most of them fail within the first 6 months, but that's another case. If you guys have a business that's 10 years old, it's always going to be able to be better off in getting funded compared to a business that's 2 years old. And so another shortcut you guys can be able to use is age corporations, which I don't necessarily want to talk too deep into this. We'll go more into depth in this in future videos. But Ace Corporation just increase your business credibility and also gives your business a higher age. It's almost like a shortcut on how you guys can be able to get those qualifying factors as far as age and also credibility. And so the third and final pillar of the funding trio is going to be your business credit. So like we previously mentioned, the stronger off your payments are, the more trade lines you guys have, and also better looking your business credit looks, the stronger off it's going to be. And so these are the three different pillars that you guys need to be able to have in order to be able to get the highest limits of funding as far as for business. Now, of course, it's going to be relative, but the stronger off like your owner's credit is, the stronger off your business credit profile is, and the more agents you guys have, the higher the limits of funding you guys can be able to get. So that's what's going to separate somebody from getting $200,000 in business funding to over $1 million in business funding. It's how good your financials look compared to all three of these different factors. And for the most part, that's what lenders are going to look at in order to be able to make their actual criteria if they're going to lend to you guys or not. One last thing that you guys can definitely keep in mind, right, is how to be able to actually monitor your business credit. You guys can be able to use monitoring tools like Nav, Experian Business, and also Credit Signal, which is part of Dun & Bradstreet. So it's going to be very important because you guys can be able to get a lien or a default on any one of your business credit reports. You guys want to make sure you're checking this periodically and regularly before you guys even try to apply for funding. And one thing I would also keep in mind, right, is to make sure your business is always in good standing with the Secretary of State. If you guys haven't paid your taxes or even your franchise taxes with any of the different states that you guys are with, you'll need to be able to fix that before you guys go apply for business funding. So I really hope this video is helpful in this 4th series on how to actually be able to properly structure out your business and also go more in depth in business credit. So in the next video, we're going to be talking about more advanced strategies on how you guys can be able to build out your business credit. And if you guys haven't done so already, please make sure you guys go ahead and subscribe. Your boy's trying to get that 10K, definitely on the road to 10K. So if you guys subscribe, it would be much love. And as always, I'll see you at the top, my boy. Let's get it.